Hi, this is EURUSD and today it's Monday, 19th of August 2013 and the time is 7:02 GMT. We are looking at the H4 time frame of the pair and I just gave a chart signal for the pair and you see my chart setup. I'm using Ichimoku Kinko-hyo. You see the Kumo, the cloud here. The upper border of the bullish Kumo is second span A. The lower border of the bullish Kumo is second span B. The opposite happens for the bearish Kumo. You see Tenkan-sen, the red line, which contains the price action. Kijun-sen, which the blue line, which offers a support or a resistance depending on the trend, and Chikou-span, the green line, which imitates price action, but it is shifted in the past. If I turn the candlesticks into line, you will see that Chikou-span is exactly the price action, but shifted in the past. Okay, so we see that on the H4 time frame, we see that the leading Kumo is the Kumo is horizontal. This is indicative of a potential reversal, although it doesn't happen always, but it's indicative of a reversal. We see that the leading Kumo is slightly bullish, but its edge is not as sharp as we'd like it to be. Chikou-span goes down. It's above past price action, but it's not below it as we want it. It's not going straight up, so it's not a bullish picture. Price is moving inside the Kumo. Okay, it's a neutral picture. But we can see the bigger picture and we can go to the smaller time frames. We will be monitoring our trade from H4 time frame, but we will pinpoint our entry from M1, 1 minute time frame, and we will look at the bigger picture now to see where things are heading. Okay, now before we go to the daily chart, I want to show you something which is related to candlesticks, because every element of technical analysis can be combined with each other. I'm not among those who believe that you only should use one technique, one system, no, it's our money here. Okay, we will use as much confirmations, as many tools, as much information from anywhere we can get it, even if we have to take advice from our astrologer. Okay, don't laugh, it's important. So you must always bring all your knowledge in your mind and make sure that the information agrees. Each piece of information confirms the other. That's why you should get the broader possible education in Forex. That's why you should not rely on bots. Bots are like autopilots in the planes. They are useful, but only where the pilot is there, knowing how to interpret them, how to control them, and how to when to switch them off. Okay, so you are the pilot of this plane. Don't rely on one system or on one piece of information only. So I'm going to the candlesticks. I'm going to magnify the chart a bit so you can see. We have one powerful candlestick formation here. I will insert a shape to make it clear for you. You see here, although we had this huge bullish candlestick, we have double top, lower close formation. Okay, double top. These both candlesticks have the same top. Okay, the close of the one is the same of the opening of the other. Okay, there are some spikes but the shadows, the upper shadows, but we have double top, lower close. Of course, it would be even better if the close was even lower, but it's enough to give us a very strong bearish reversal signal. Let's see this again. Do you see this here? Let me insert another shape. I'm doing this because some friends tell me, you're giving us your Ichimoku signals all the time, Ichimoku, Ichimoku, Ichimoku. Don't you think it's a bit monotonous? Well, don't fix it if it's not broken. When it works, keep it doing till the end of time, okay? It works. That's why I'm giving you the Ichimoku signals. But it doesn't mean that Forex is only Ichimoku. There are so many elements outside from Ichimoku that can help you, can enhance the signals you get from Ichimoku. So we had another double top, lower close, candlestick formation here, and look at the downward move that followed. And then we had the opposite. We had, let me insert a different color of shape here. I will change this. One moment. So you can see that using other system, other pieces of information, okay, other pieces of technical analysis, they can be combined with the Ichimoku system and give you confirmations, okay? That's what we want. So we had a double bottom higher close, which is the opposite of double top lower close, which pushed the price up here, okay? We had another one here, okay? This pushed the price up here. Then we had another one here. Let me insert the shape again. Another one, double bottom, higher close, okay? And push the price up here, and now we had double top, lower close. Boosh. Now, I'm going to remove all those things. I'm going to make the chart smaller. Zooming out is always better for you because you get a bigger picture. Let's go to the price in the meantime has gone up. Don't worry, there may be spikes. That's part of the game. That's trade, okay? It's fluctuation is its second name. So let's go to the daily chart. On the daily chart, we see that price hovers above the flat top Kumo. Flat top Kumo is a magnet. You see what happened here on this? Let me insert the shape. Look what happened here. How the flat top Kumo attracted the price and what fall we had. So this formation here and the fact that we have double top lower close candlesticks, which this time are huge, okay, on the daily chart here, and we had them here too, they signal a bearish reversal, okay? So let me magnify this. You see here, double top, lower close, double top, lower close. Let's see how things look like on the weekly chart. An horizontal Kumo ahead, okay? its edge is going to we're going to have a cross, a second span A, which is the upper border of this Kumo, second span B cross. This is very, very strong signal in Ichimoku Kinko-Hyo system, but it remains to be seen if this is going to be a bearish or a bullish Kumo, the one which is going to be born. Okay, at any minute the cross can turn upside down. Since the distance is 0, we are at a very key point here. Let's see how things look like on the monthly chart. On the monthly chart, we see that things are rather bearish because price is below the Kumo, and the distance, look at the distance between the upper border of this bearish Kumo, which is second span B, and the lower border, which is second span A. If they were close to each other, a reversal, a bullish reversal will be possible, but here we have a distance which says that bearish momentum is still present. So odds are that price would rather go down for a while than up. Although this cave here, this cave at the lower border of this Kumo, makes me think that price might try to fill it before falling. Okay, for now we see that price wants to go down. That's H4 again, and now let's go to M1, to our smaller time frames, to pinpoint our entry. To pinpoint our entry, we need to see all time frames, M1, M5, M15, M30 and H1 being 100% bearish before we enter. Are they? Let's go to H1. H1 has bearish biases. Price, Chiku span moves below price, below past price action, but it's still above the Kumo, and the price above the Kumo. We don't have a bearish Kumo breakout yet. If you are conservative, stay out and wait. You want to see price going here. Don't worry if you miss these pips. You will be 100% sure when you enter. If you are aggressive, go ahead. Everything looks more bearish than bullish. Okay, but if you are conservative, stay out and wait, because this is not 100% bearish picture. M30, price is trying to make a bearish Kumo breakout. It can be more bearish than that, but if you're conservative, you might like to wait for a couple of candlesticks to see the price hanging down below the Kumo, which is not happening yet. If you are aggressive, go ahead, enter short now, but not from here. Go to the smaller time frame. M15 is 100% bearish. Price below the Kumo, Chiku span going straight down below the Kumo, below past price action. Although I would like to see a more vertical downward slope on the leading Kumo here, which is not happening yet. Let's go to M5. M5, everything looks bearish. Price is below the Kumo, Chiku span goes below past price action and below the Kumo, and it's going straight down. Okay, and the leading Kumo has a downward slope. You see the angle, the downward slope here, and its edge is getting a bit sharp. Not as sharp as I would like it to be, but it's getting sharp. Let's go to M1 time frame. M1. So on M1, things are temporarily bullish, but here everything changes in minutes, or should I say in seconds. So it's nothing to worry if you see this bullish move, because you just wait a few minutes, and once you see everything bearish below the Kumo, with the leading Kumo being bearish, going straight down and having a sharp edge pointing downwards, with Chiku span being below past price action, not here, and below the Kumo, of course, then you enter short. This is not the case yet. You must wait. Okay, so wait till you see all your conditions met. Don't enter unless all your conditions are met. This is it. Monitor your trade from H4 time frame. Put your stop loss 100 pips above your entry here at a safe place, few pips above this high, swing high here, and trail your stop 40 to 50 pips above its new lower high. Price, when it falls, it makes lower lows, lower highs. That was one high. This is it made a lower a swing low, then it made a lower high, it will make a lower low, and after it makes a lower high, then we'll trail it from here a few pips above this, and then we will wait for the next lower low and the lower high to trail it to the lower high, to the third lower high. Okay, trail it like that. Now, take profit target. Take profit target reasonably would be, since we are entering at the stage of a bearish Kumo breakout on H1 time frame, which hasn't happened yet. Okay, so theoretically, after everything goes to the direction we expect, and this is the bearish direction, we enter at a bearish Kumo breakout on H1 time frame. It would be reasonable to exit when a bullish Kumo breakout happens on this time frame, but if you do this from the H4 time frame, it would be even better. So if you practically enter on a bearish Kumo breakout on H4 time frame, exit on a bullish Kumo breakout on H4 time frame. This is it. Your entry, it's totally up to you. You must see all conditions met. Depending on how aggressive you are, the risk is all yours. Be very careful and make sure that you don't risk more than 3% of your account's equity. What does it mean? It means that the distance between your entry and your stop loss is not more than 3% of your account equity. If it is, don't take the trade, or close some other positions with profits and then open this position. Okay, this is it. So thanks for watching and happy pips.